Welcome to part 3 of our trading masterclass. In this video, I'm going to explain trends and consolidation. And within those trends and consolidations is going to be support, resistance, and supply and demand zones. Okay? So let's dive right in. First things first, what you need to do is pick the time frame and the chunk in the chart that you're going to be analyzing. Okay? I don't really need to go as far back as 2020. So let's just dive in on the daily chart right here. It just looks like a very long consolidated area, right? The difference is, as you can see, it's making higher lows each time, right? So this one is lower than this one. So I mean, we're going to the right side. So everything on the left is lower than what's on the right, right? That's what I mean by higher low. So, for example, this would be our starting point here, and then we've made a higher low here, and then a higher low here, and then a higher low here, right? So you kind of get the idea. And same thing with higher highs. So higher low, higher highs show us that even though it's a slow trend upwards, it's still moving up, right? It's not just going sideways like you see here in this consolidated area. Okay, so trends, better yet, this giant move right here is just a very long trend. Okay, within the daily time frame, it's not going to be as obvious as you jump in on the smaller ones. So let's pick the particular area of, from November until now, right there. So we'll jump on the 4-hour chart. Okay, and we're just going to make sure that entire spot is visible right now. Candles will be a little bit small, very hard to see, but you get the general idea of the movements, okay? So this area right here, you see a peak and then a bottom, that is considered a trend, right? Everything is moving in one particular direction. Now, yes, it has some volatility in here, but overall it's from up to down, okay? When the chart goes and you see a peak and bottoms, but they don't really go anywhere, right? Like you had a little breakthrough of the consolidation, but it popped right back in. Okay, so this area is considered consolidation. Finally, as you can see, consolidation was broken, like it did pop a little bit higher, so we could use that area. But overall, you see that those were just, whether it was a day or a day and a half, like it didn't last very long outside of consolidation, right? So as you can see, if we draw the measuring tool, 52 days approximately of consolidation. And once it popped out of consolidation, it only lasted about a day and 8 hours, the first one, right? The second time it popped out lasted for 3 days. And then the final time it popped up lasted for 20 hours, right? So within 52 days, it was really only 5 days that it went outside of that entire zone. So it's still considered a consolidation. All right. You can even see mini trends within that if you jump on even smaller time frames. Okay, but you can tell right here, once it starts dropping down and it doesn't pull back into that zone, it turns into a trend. Okay, so even better yet, this would be where it kind of ends. Actually, where I drew it seems to be pretty reasonable, right? So there it goes. And the consolidation actually turns into a trend going from that peak to that low, right? You just have one smooth move all the way down. So within, how long was this, right? So from 1 to 2, we had 2 very large trend movements, one large consolidated area, and then another large trend movement, right? You can see the consolidations typically last a lot longer than the trends, okay? And it really depends too, because sometimes as you see the very steep drop from where COVID peaked all the way to down to May of 2021, right here, right? So that was very significant. This was just a very long trend, which lasted 427 days approximately. Majority of movements, when they decide to trend like that, it doesn't last as long. This was very obvious that it kept going down, right? Even when we use the Fibonacci tool, you can see from the trend area, we go a high to a low right here. It doesn't even pass the 328 retracement level. right? Even if we go to that lows, like it barely touches the 50%, right? So down here is the 328, going even lower, it's still within a 328 zone, right? But that's from peak to that lowest part right here. So I would say it pulled up slightly. Okay, so even if we draw another one, we use a peak and go down to the next valley, which is right here, you can see that within the full trend, you can see little mini pullbacks, right? So it's a good indicator that this is still going to be dropping. If it pulls back and doesn't even cross the 618, it's a good indication that this is a strong trend and wants to continue in that particular direction. If you see overall that, you know, from the peak that we had here, and you keep drawing that line, and you can see it doesn't even pull back to the 618. Like we're just coming up to a 50% now, like within the last few months, right? From that move all the way back in March of 2020. And it's been very slow, right? Typical pullbacks happen a lot slower, and then the continuing drop will be much faster, right? The only kind of spike that we had, as you can see, it was more or less consolidating for quite a while, and then once everything shut down, it spiked up, right? Where US dollar exploded in its value and the Canadian dollar dropped really hard, okay? And now we're starting to see it kind of level off, okay? Within, like it's still, I would say it's still unreasonably high, but Canadian dollar on average, in my opinion, shouldn't be worth that much less, like it maybe $1.10, $1.15 max, right? What's been happening is just a little bit absurd, right? All of this time is a bit much. I really like the times before our current fearless leader, if you don't mind me saying, right? You could see where our equal dollar value amounted when it was, since when was it started? Let's see, right here, like around 2010, and it kind of held that price approximately until July of 2014. So 4 years of pretty decent prices, but you can see right now, okay, even if I use the daily there, and I'll use a fib channel, the fib retracement tool, right here, like peak, low, and then high, right? So you can see kind of where a potential goal would be to drop to. Anyway, not part of this current lesson. Let's continue on. I got sidetracked. I apologize. All right, so we're back into trends and consolidations. So we jumped in on this area, and like I said, within a 4-hour time frame, you saw the big difference there. Okay, so now we need to be able to pick them out and understand where it actually starts trending and consolidating. Okay, and I mean, candles are a good indicator. It clearly shows you where it's going up and down. But the best thing to clearly show you where it's moving and where it's trending are the EMA lines, right? So EMA stands for Exponential Moving Average, and each line signifies how many candles come before it collects that data. Okay, so I'll show you my EMA settings right here. So it's 5, 13, 55, 233, 610, 987. What that means is this yellow line collects data from the 5 previous candles in order to show where this line is actually moving. Okay, the red one collects data from 13 previous candles at its current position, right? So let's say, for example, we hit replay and we're dropping it right there. Okay, so now where you see these lines, the yellow, you see this giant red one close, and the yellow just started dropping there because it collected this much data, the current candle plus the 4 previous ones. Okay, that is the 5. 1, 2, 3, 4, 5. I mean, it closed here, so it's included in that data collection. I'm just going to bring it to the front, right, just to make sure that you can see it. Bring it to front. There we go. So you can clearly see those lines. Okay. Now the red one, it's collecting data from 13 of them. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. These candles right here. Okay, that's what the red is collecting data. So as you can see, even though that we've had big drops, because there's been more green candles and it did move up overall, that's why it was still rising, even though the yellow dropped down to meet it, right? So much more information needs to be gathered for the larger EMAs. And that's why you see kind of the brown and the black almost going sideways, because it's collecting, the brown one is collecting 610 candles worth of data to show its current position, and the black one is collecting 987. Now, I know what you're going to ask me, why do I use Fibonacci EMA instead of the normal exponential moving averages that everybody else uses, like the 50, the 200, the 800? My very simple explanation is that those numbers are meaningless. They're just kind of pulled out of thin air, and they're just nice round numbers. That's all it is, right? Fibonacci has proven time and again that it is much more useful and prominent than anything else that traders use. So this is why I actually enjoy using those particular tools. Okay, so now as you can see, when we drop down to here, we drop down to this area, and what I'm going to do is just delete all those boxes, right? Remove the drawings, because now what you can see on the 1 hour time frame, much different picture, right? Like where you saw on the daily, this was consolidation. It's just almost moving sideways, right? Like all that area just moving sideways. On the 1 hour, right? That big valley that you saw paints a different picture, right? So even within like the lower time frames that you go, you're going to see much steeper movement, right? But the pips are going to vary, obviously. So for example, right? You see this trending all the way down, and this just kind of moved. And where is consolidation? All in this area, right? It looks like it just has sharp moves up and down. It has a very small consolidated range there, okay? And it has a small consolidated range here, where everything is just kind of moving sideways, right? And just before that trend area here, right? Otherwise, that's trending, then it starts trending up this way, okay? And then little trend right there, it's not really consolidation because it's still pretty volatile. Then it goes sideways. That wouldn't really be considered a trend. It's a very small movement. Trends are typically ones that last a significant amount, right? So as you can see, I mean, that lasted over the period of 2 days, right? And it just kept going down. Consolidations are just sideways movements, right? Oh, let me get rid of that one. Okay, so as another example, that's a consolidated zone, right? Just a box and everything stays within it. That's a consolidated zone right here. Okay, this is a consolidated zone right here, right? So you're going to be able to pick this up much easier with EMA lines drawn, right? My best advice is anytime you see the yellow and the red almost on top of each other, that's a good indication that it's consolidating, right? When they start to spread, good indication that is now in a trend. Okay, the only thing you got to watch for, and the reason why I use larger EMAs as well, is for something like this. You can see if there even 3 of them are on top of each other like that, maybe not a great idea to jump in a trade. But when they start spreading like this, like you can see the yellow and the red is spread and they're moving away from the pink, right? Nice trend down. Even though that there is a consolidated area, it's still split. It doesn't cross back up. It continues to go. Okay, so just very simple. That's one good way of being able to discern what is a trend and what is consolidation, and how to look for where we're currently at. Right, so let's remove the replay and see where the charts are at right now. Right, so here we go. On the 1 hour, this is what I can see. It had a quick trend moving up, then it dropped down, right? What did it drop down to? Let's take a look, right? Because we can see that it's slowly moving up. So let's draw from this pin all the way to the top, right? And it kind of hit off that 50% mark, and now it's moving sideways, right? So this more or less is a consolidated area. That's not trending, it's going sideways like I said, right? EMA lines are almost on top of each other. Good indication that this isn't going to be going anywhere anytime soon. It might just go sideways for a few hours, and it's 11 p.m. my time, so that's 1 a.m. Eastern. Both the United States dollar and the Canadian dollar are not trading in their home countries. They're being traded right now overseas. So you're not going to get a lot of volatile movement. And if you don't believe me, look at this big green candle. What time does that say? 8 a.m., right? Which means that's 10 a.m. Eastern. And it keeps moving all the way until it hits this area at 5 p.m. my time, so 7 p.m. Eastern. Realistically, all these movements afterwards, right, were done after hours. But now look at this, right? What was the after hour market? After 3 o'clock my time. So this to about this, right, 8 a.m. All that was done after hours when the United States and the Canadian dollar are not actually trading their own currency, okay? And as you can see, where it closed off after that market and then it opened back up, it's like it filled its own gap. It just kind of did an arch and dropped right back to where it closed when the markets closed at 5 o'clock. And then markets opened, and as you saw, the movement kind of continued. It had a large move right here. So if we go on the 30-minute time frame, you get more information in regards to those big wicks and what happened in them, right? Lots of movement. This is a lot of volatility. I don't like trading within that. But after all that was over, look, it just kind of, didn't really do many sharp moves. It just kind of dawdled along, okay? So again, trend consolidation, very straightforward. All right, now what I'm going to do is jump in on, what was I saying? It was supply and demand zones, and one more that I'll talk about, support and resistance, okay? Support and resistance, pretty straightforward. I did talk about them in the market structure video and what to look for, but just a quick recap. Right? Resistance zone is where you see kind of candles bouncing off a certain area and going up. And a resistance zone is what they're bouncing off of. So imagine like a ceiling where the candles just don't want to go higher. Right? So even at this time frame, look at this. One horizontal line, I'll draw it black. Okay. It broke through resistance, but then went right back in it. And now it's retesting it. So you see how significant this zone is. 1, 2, 3, 4, almost 5, right? So 5 and almost 6, I would say, times that it came up to this zone and rejected, right? It only broke through once and came right back down. Now, here's the situation. It did break the resistance and go up, and it made a higher low, right? So overall, the trend for this long term, I would say that it will finally break the resistance and use it as a support. Okay, but right now our current support, if we don't count this large dip right here, right, the majority of the time where candles are hitting off of would be this line, right? So you can see it kind of broke through once, retested it, went up, tested, went up, tested, went up. Now it hit its resistance, went back down, tested it for a couple hours, then went through it, came right back above it, and now testing, and it hasn't dropped down since, right? So it's a good sign that new support and resistance zones are being made. Typically, what happens on a trade when it's trending down, support zones end up becoming new resistance zones, right? As pairs end up dropping further. So, for example, right, you can see that let's say we go all the way back. How far back do we want to go? Let's just take a look. Okay. So you can see right here, it used to be this black line, right? It dropped through back in January, and now it's being used as a resistance zone, right? And now, once again, it kind of resisted, and now it's finally breaking higher, right? And once that happens, I mean, there could be a little bit of a pullback. We can always do Fibonacci retracement to figure that out. But now, as you see, it's not really using that as much of a support. So now it's just bouncing in between that support line, right? Especially here where it's consolidated for several days. Like this is almost 2 months of consolidation, right? Before it breaks through that. And then, boom, we hit another level right here of resistance, okay? Because multiple wicks or candles close in that area. So it's a good sign that quite possibly we can take trades off of that area, right? So market structure trades. Now, supply and demand zones, okay? So these are small, like very small consolidations within a trend, okay? Best way I can explain it to you, it's just when a trend is moving and it stops briefly and then it continues, okay? So, for example, let's find a good trend out of all of this, okay? Let's see. What would be a good example to show? All right, so, okay, so just a minor little trend right here, okay? We'll use this spot. This, well, hopefully the box clicks, there we go. We'll use this area, okay? So, as you can see, when the candles start dropping off, it just slowly keeps moving, EMA shift, and then you have the sharp move, okay? Now it pops up to a supply area right here. So you see where a candle closes, I'll just delete that so you can see clearly, but when a candle closes and the next one opens, it's almost like a parallel area, that is considered a supply and demand zone. Okay, just like a little pullback before a continuation of a drop, right? So typically the first area that it pulls up, that's what you want to keep an eye on. Because if it drops lower but pulls up past that zone, then the trade is essentially over. But if it doesn't pull up to that area and keeps going lower, it's a good sign that, you know, this trend wants to continue. Okay, now look what happened. We hit one zone, and then it dropped down, popped up quickly, but you see it didn't even close above this candle, and then it dropped lower, right? So that's a good sign that this is another zone where it kind of peaked up and dropped back down. So supply and demand, that's where they are formed. Those short little movements right here, okay, those bottoms that it kind of hits before a short little pullback and followed by a continuing drop, okay? And again, the same works on the opposite climb as well, right? So if you see, like this is kind of a bad example because that's moved very quickly to the up direction, like there wasn't any chance for it to drop back, but we do have zones of liquidity, and I'll get into that. We can get into that in this video too. It's very quick to explain. All right. But look, great example of a climb right here. You see? So as it's going up, you know, it finally moves this way, and then it goes sideways a little bit, right? Just right now to collect any stragglers from banks, right, in order for them to be able to jump on that trend. And it pulls back down, collects once more, up it goes. Now you see right here, it just goes sideways for a little bit, and then keeps going, right? Another little collection spot, it drops, but it doesn't beat the previous low, right? Keeps going. Now, one good way to tell how successful these trades are going to be is the EMA lines. Okay, so as you see, all the way from the bottom here, when the yellow, red, and pink kind of split from each other and start climbing, look how the yellow and the red continue to stay split. Right? You can, and right here it comes close. It almost breaks that area, but it continues to go higher. Once they cross over, it's a good chance that the trade could potentially be over, or a significant retracement is going to happen. All right? But that doesn't mean that this is a supply zone. The supply zones happen within the trend, right? And then the short areas where it just kind of pauses, goes sideways for a little bit, and continues its movement, right? And the best way to tell if it's not a supply and demand zone is if the EMAs cross once again, right? So if the yellow would be crossing the red here, let's say, right, and the candles would dip down, that would not be considered a supply zone anymore. That would just be considered a pullback or retracement. You know, could come down to this area before going higher. All right, so there's that. Now, areas of liquidity. All right, so that is kind of within a larger trend. You'll see spikes that kind of come up to its original position or even halfway up, and it tests that area several times, right? So for example, now what we see, like let's drop this on the daily, right, a higher time frame, and this will be a good indicator as far as liquidity zones. Okay. So let's take a look. All right, this is kind of a perfect example when you have a very large consolidated area, like you have kind of small trends within an overall large consolidation. Okay, so your zones at that point, right, you're going to see that, for example, if you wanted to jump in on a trade, right, and you got in a little bit late, okay, let's say you saw this climb happening, you're like, oh, fantastic, I'm going to jump in, you know, and you wanted to go, you weren't sure, and you finally jumped in around here, right? You jumped in, and then, oh crap, it started to drop, right? But instead of liquidating your position, you held on, okay? You held on to that position, and you had a little bit of a chance here, and then it dropped lower, and you're like, oh my goodness, how long is this going to go, okay? So now look. Comes back up, now makes a higher low. Okay, so there's hope in sight. Pulls up, starts dropping down, right? And it kind of does this for a little while until it finally hits an area of liquidity, right? Which would be here. And now what that means is, as you can see, it doesn't beat the previous high, but it comes up high enough where people that, let's say, if they got in on the top, they would be able to take minimal losses if they got out right at that peak. So areas of liquidity are great potential areas to get in back with that overall trend. All right. It's really hard to gauge as well if it will peak at an area of liquidity. There's no way of knowing until you're analyzing in the past, right? Market makers are the ones that design these kind of movements, right? So that's kind of give false hope to the people that are still in here, in hopes that, you know, let's say that they jumped in here, finally it hits a little bit of profit, and they're like, you know what, should I let it go? Maybe I'll let it ride, and then it drops the opposite direction, right? So they're back into their losses and gloom and doom. And it's very unlikely that people hold positions for a year that's in a loss on Forex, right? Look at this. Within here, before it even comes back up to their entry position, that would have been in December of 2018. It's March of 2020, right? So that's over 2 years of holding a losing position before it actually reverses and you have a proper chance of breaking even or even making profit. Okay, so that is really what an area of liquidity is. It's a chance for banks to pull up that area where it kind of peaked before. It's not really to give false hope. It's for them to have another opportunity to grab more positions and bring it further down to increase the value of that trade. So even here, like I said, in this big consolidated box, right, we made a peak here, but now you have 3 areas of liquidity, right here, here, well, I should have copied that one, so there we go, here, here, and here. Now each time, I'll delete that one, each time you can see that they're a little lower than their previous one. All right, so let's take a look at what that looks like on a smaller time frame, because this is actually a couple beautiful trades that you're able to take, because even in this area you can identify support and resistance, right? So check it out. Here's a support. This is as low as it went, and it didn't make a previous low, right? Here is the highs. I kind of broke through the one time. So let's say, for example, you didn't know that it's going to peak 3 times. Okay, so this is what it looks like after 2. You can see it bounced off this area multiple times, and the bottom black area is the lowest that it possibly went. Okay, so now you're kind of stuck in the middle. What are the chances that it's going to be hitting this lower part? Who knows, right? It's possible that it'll work out. Maybe it won't happen. If we switch to a lower time frame, this is what we see on the 4-hour. Okay, you see consolidation up there before drops, supply zones before further drops, right? Now look at this, what happens, right? It kind of went to the bottom here. So if, let's say, this is our current candle, this is where we're at, it had a wick, now it formed a doji, so maybe that's a good spot to see, hey, maybe this is going to be the bottom. You know, let's see if it continues. And it's just consolidating until that red candle kind of pushed it. Oh, yeah, there he goes. You see? So the drop continues to happen, and what would have shown that this movement is still going to continue, right? We're on a 4-hour time frame, so that means this still lasted for a few days. A good example, like I said, is the EMAs, right? They're still split, it's still dropping, it doesn't show a sign of reversal until the EMAs actually catch up with each other, right? So to take a buy here, very bad idea. Okay, even though you see where it's been consolidating, it could be identified as another support zone. The trouble is the EMAs are still sharply pointing down. There is no sign of reversal with them, right? Look, that's not a trade you want to get into, especially against the trend, right? Oh, now it's spiked up, right? Now you finally get that big spike on the yellow to see if that's going to be a trend reversal. And that sucks because a big parallel candle right after it. So typically when I see something like that, it tells me that it does want to go lower. I think there's, what was the statistic? Like there's between 89 to 92% chance with this particular candle pattern that the next candle will always be the same color, right? So again, 89 to 92%. Like that's saying, you know, when I say always, I don't mean that it's always going to happen, because that's like 60% of the time it works every time, right? It's a pretty stupid saying. But again, it's a very high probability that the next candle will be the same color as the previous one, right? Sure enough. Oh, it didn't happen, right? It closed green. So that was one of the probabilities. It just didn't work out. But because of that happening, you know, the great sign that you can take away from this, when the candle doesn't close the same color, it's a very strong chance that this is going to reverse. Okay? And now look what's going to happen. So now this is our new bottom right here. So let's see if it breaks that bottom. It kind of did with the wick, but it doesn't seem to want to go much lower. See, look, it's testing it with the wicks, but it's not closing below it. Now it probably will after that one. There we go. Right? So again, parallel candle, the chances of the next one being green are very high. What happens? Nothing. Just kind of stagnates. So maybe, unfortunately, it's not really working out my favor. When I say 89 to 92% chance and you just saw 2 for 2 that they were opposite, you know, it doesn't bode well for my statistics. But I mean, we're just taking a snapshot in time. And this was done over the course of many years and the data collected. Right? But like you see, we formed a low and now we have another low, and we'll see if it passes that area. Right? EMAs haven't shifted yet. So that's why this trade would be a bad decision. Now see, the wicks are testing it. Still testing. Oh, still testing. Finally went up. Now at the end of this candle, that's the EMA shift. Right? So as you see, now the yellow switched over the red. This is a good potential area to take a buy on this trade, right? If we're just watching the EMAs. So yeah, where areas of liquidity, like I said, were up here. We knew that it was going to drop, but we didn't know where the bottom was, right? So if you're analyzing it on a day-to-day basis, you kind of discern that this is now the bottom, this is the new support, okay? And now it's going to climb, right? So we'll pause that for a second. But now we know when it finally starts climbing and we get this, what's the potential target? It's going to be the previous resistance, right? It wasn't resisting anywhere else. There's going to be areas, right, of volume, which we'll get into in another video, that have a potential of, you know, rejection or breaking through it. But right now, when we're just looking at support and resistance zones, right, we've discovered that this is now a support. Resistance was established up here. The chances of it hitting that area are pretty good. Okay, so now let's continue the candles. And at this point in time, right, I mean, it'd be pretty sketchy to take a buy because now everything's still pointing down. So we're not entirely sure if it's going to hit the top, right? So you always want to use extra tools in your arsenal, because now you can see it hit off that 50% here. That's the golden zone for a continuation. Let's see what happens. Okay. So it still kind of stayed within the golden zone. It rejected higher. But as you see, when you jumped in the trade, here it probably would have been a good sign to exit when they crossed again, started consolidating. And then parallel candles, remember what I said? This one was a pretty nice breakthrough, and it showed exactly what I was talking about, right? The next candle worked out nicely. So then there we go, and now the EMAs don't shift until we get to this area, right? So from here to here, I mean, 9 days for 76 pips, we could do better, right? But as an example, this is kind of what you'd be looking for as far as jumping in at the right time for trades, okay? But anyway, the areas of liquidity, like we were talking about before, it's all done on larger time frames, and now that we know we know overall that it does pop up a little bit higher and come close to that zone, but doesn't quite hit it. Okay, so what that can also tell you is, again, when we switch to a lower time frame, okay, and now you see a peak, but now it doesn't break that peak with this candle pattern, it's a good sign it wants to drop, and that's exactly what happened. So yeah, I mean, hopefully that makes sense with areas of liquidity. Again, that is just information to have. I wouldn't base any trades off of that. It's just good to see zones where it kind of peaks up, because then you have a potential to enter another trade based on what happened in the past, right? So, for example, even using the brown, like when it's trending like this and the brown line, you could see how it kind of bounced through it and went right back up, consolidated it and went right back up, a little bit of movement to the bottom and went right back up, right? So it's a good example that once it breaks through, it has a very strong chance of going back up, right? But what's the trade look like if we take that spot? So that would have to be 70 pips here. What's the previous one? How far did it drop here, right? It looks that it dropped about 75 pips would have been a safe stop loss, right? But hey, you could have rode it to, 800 or 900 pips. Doesn't really matter, right? So let's say 75 pips was that one. Next time it came to the brown, looks like 75 pips is a safe range, right? Next time it touched the brown, looks like 75 pips is a safe range. Right? Not saying that you're going to get a 3-to-1 TP out of that. Like this one barely hits, even a 2.9. But good example to show that even EMAs can act as support or resistance. Okay, it doesn't necessarily have to be a straight horizontal line. Right. One example that I'll show you, I'll jump in on another chart. Hopefully I have them drawn up. Yeah, so here, for example, right, you see these diagonal lines, and I'll show you on the monthly scale what they all look like. Okay, this is called a fib channel, where it's drawn up between specific points, and this is used kind of like a diagonal support and resistance. I find it to be incredibly useful when you tack it on with several other indicators or drawing tools, right? So for example, where we're at right here, yeah, there was a little mini trade I took in there and it was not pretty good. But anyway, look at this for example, okay? In this monthly structure, I mean, we're not going to be doing month-long trades, but just a good example, okay? So you can see long-term, like years in advance, where things are going to go. Look at this. Off the aqua right here, down to that area, okay? It kind of tapped that area of the golden zone, like it broke it briefly, and now it's just hovering here, okay, for several months. But now look at the significance. You see that it is the 786, but look at where the candles are closing. They're not closing above this white line. What significance is that, right? It's the center of these candles, right? So if you see the Gann box, watch this. If we draw it up on this month, right, this white line is slightly above the 50%, which when we, I'll get into institutional candles and imbalances in another video, but just to give you an example, once we do, this is over 50%, so good entry at the 50% or higher and take a stop loss a bit higher than that. But anyway, on the monthly, watch, just a bit higher. What's the significance? Look at this. The rejection off of the white line before a final breakthrough. But you see, it broke through. It didn't even last a year. Dropped back through it, tested it once, and never saw it again until now. And now what we're seeing is for 1, 2, 3, 4, 5, 6 months, it's rejecting off of that line. Okay? And this is all the way back in 2007. So you can see even after 14, 15 years how significant these actual lines are. All right? Use that to your advantage. It's a fantastic tool to have like a diagonal or a trending overall support and resistance zone, right? That's kind of the best way to describe it, a trending support and resistance zone, right? And I'm not talking about a small trend. You definitely can, right? Like in your USD CAD, for example, okay, if you want to do on the daily chart, and this is where we're sitting right now, okay, you can easily draw a fib channel within this to give you a good understanding too, right? The way it works, it's either, if it's trending down, you go from 2 peaks and then the lowest point in between them. If it's trending up, then it's the 2 lowest points and then the peak in between that, right? So let's pick, this part is lower, so there's that. The highest part is here. Boom, look at this, okay? What I say about support and resistance on a diagonal scale, look at this. Bouncing right off that aqua, which is the whole number from this area. You know, it doesn't drop back down to the 0, but now look all the significant lines where it's bouncing off of. Okay? The big ones are right here off the 1 where it bounces and it drops lower. Okay? But now you see, even in between these 2 lines, how significant the white is. Right? Drop below here once, dropped here significantly further. I mean, that's where we got our low, right? But even in here, you're able to see that, hey, it didn't drop there once again, even though that doesn't, even if it touches this line, you can see it still doesn't break a previous low, right? But the best thing is, once you start to understand how useful this is, right? Even this GAN box, 50% from this institutional candle, boom, what a nice entry that would have been. Right? So anyway, we'll talk about institutionals and imbalances another time, and I'll get into how to take entries both with market structure and a strategy that I'll teach you later on in these videos. Just a little spoiler, the strategy is very good, and it is designed so that you can use it with a free trading view. You don't need to pay extra to have a whole bunch of indicators. It requires 3 indicators. You can even do it with 2. But the third one, I like the MACD. It's kind of the tiebreaker if I'm unsure whether or not to take a trade. Other than that, it's something called Rob Booker Intraday Pivot Points, which I do have a how-to video on that, and the Fibonacci EMA. That's it. That's all you need. And once you see and once I describe the strategy to you, you'll be wondering why this is so friggin' easy. And you'll understand, oh geez, always the alerts. And then you'll understand that actually winning at trading will become a lot easier. Okay? So keep your chin up, guys. Keep following the videos, learn what I have to share with you, and you'll be a very successful trader. Okay? And of course, any comments that you want to address, if there's any way to improve the video, or if I didn't quite answer the topic at hand in your mind, then please comment. I'll do my best to either recap with another video, replace it, or just address your comment. Okay? So thank you very much, and I'll see you in part 4.